Hello, and welcome to the Motor Trade Radio podcast, powered by Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the car retailing sector, from factory to forecourt.
Well, if you're listening over the weekend, it's now August, so welcome to August, and this is episode 46 of the year.
It's been a busy year, Kirk. It's been a busy year, haven't we? It has, yeah. Let's hopefully summer doesn't go as fast as the first half of the year has gone, and but yeah, we're busy. So we've got a couple of shout outs before we get into this week's headlines, but. The first one is obviously from if you haven't caught up with our trade value and retail value catch up with Rupert Pontin from Brago, and that was last week. That should be on your podcast feed. And I mean, it was a great little chat with Rupert Pontin, chatting about obviously around EVs, the Chinese manufacturers, and particularly around those fastest sellers in the market as well.
Yeah, definitely worth checking out because it's very much his overview of how those trade values performed over the course of July, and just looking at some of the market sectors, the fuel types, and as you say, the new entrant brands. Speaking of which, we also caught up recently with Steve Young from ICDP and the MD of Auto West London, the JCB and Automotive business. And if you haven't listened to that episode, it's definitely worth a listen because great overview from Steve about what's happening generally in the industry at the moment, and also his take as a dealer group boss and looking after two brands that are really going somewhere at the moment, JCB and Motors. So standalone episode, do check that one out.
Never want to miss is Steve, and as Curtis said there, shares a lot of insight around market activity and particularly now at the front end of the market. But we've got hopefully next week. You need to listen out for when we manage to get the recording and share it through the social channels and through your podcast feed. But hopefully look out for the chat with respected industry consultant Philippe Munoz, who during the week, who you'll remember we had him on previously when he represented JTOG. He's now on his own, but he continues to share fascinating insight, particularly on the UK, Europe, and global manufacturer marketplaces. But obviously, he spends a lot of time in looking at that, the manufacturer representation, particularly those Chinese manufacturers. So hopefully we'll get a good chat with Philippe next week, and we'll share that through your podcast feed. I know you and I are certainly looking forward to that one, aren't we?
Oh, definitely. Yeah, really looking forward to it. And we have been chatting to Philippe, and he's going to be looking at the impact in Europe and globally made by established, new, and also soon to be launched Chinese brands. So a lot of content there to catch up with. So do look out for that one next week.
If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers, and decision makers on one of our Motor Trade Radio supplier special episodes, then get in touch at motortraderadio@yahoo.com.
And some of the companies already featured in our supplier specials include Impel, Prospecting Dynamics, ETT, and Generational. And you can find them all in your podcast feed, along with some of our recent OEM specials with new EV brands Verizon, Ion, and Shangan. And we also caught up recently with Suzuki. And if you'd like us to profile your business, then just message us at motortraderadio@yahoo.com.
You're listening to the Motor Trade Radio podcast, powered by Cazoo.
Well, lots going on this week with headlines from AM, Car Dealer, Motor Trade News, Motor Trader, and The Times. Starting with top shareholder has opposed a US private equity firm's £545 million takeover bid for Pinewood Technologies. One third of dealers see a growing market for 100,000-mile used cars, although, as we'll see, customer expectations of used cars are already out of step with the market. We have two updates from Big Motoring World, its first half trading and a move to scale back its big Wants Your Car operation. In the second half, we have an industry spat between Robert Forrester from Vertu Motors and Labour MP Perran over the ZEV Mandate. They're both friends of the pod, so that's going to be quite an interesting one to look at. In other news, JCB acquires a Volkswagen site in Kent. And finally, this week, we'll look at how Leeds-based Luscombe Motors is rewarding its hard-working employees.
You're listening to the Motor Trade Radio podcast, powered by Cazoo.
So as Curtis mentioned there, we're going to go to the Times initially, and we covered this story recently, but it has moved on a little bit. And this is that top shareholder opposes US firm's $545 million takeover of Pinewood AI. And this is that Harwood says preferential liquidation rights in sale of car dealership software group would create a damaging new precedent for investors. I mean, that kind of says it all there, Curtis, that with what they're trying to do.
Yeah, and I think we can guarantee we'll be revisiting this story once the dust settles a bit. But yeah, this is so one of Pinewood Technologies' largest shareholders, Harwood Capital, is refusing to support a proposed £545 million sale to an American private equity house called Ridgeview Partners because of an unprecedented clause in its takeover offer. Now, Harwood owns 5.7% of Pinewood, and the Times report says that it's taken umbrage, which is always a nice word to drop into a sentence, with the preferential liquidation rights set out by Ridgeview Partners. So last week, this was reported over the weekend. It was first appeared in the Sunday Times and has been picked up by some of the trade titles since. But so last Friday, Ridgeview tabled a 448 pence per share bid for Pinewood. And under the terms of the proposal, Pinewood shareholders would have the option of selling their shares for cash or rolling them over into the new company. So that's all fine. But in the offer documents, Ridgeview said that in the event of any future sale or liquidation, it would be made whole first, while any Pinewood shareholders who rolled over their stakes would have to wait their turn. And this is really where it's all started to kick off with Harwood's.
Yeah, exactly. I mean, they do say that obviously it is that risk of setting that precedent that, any kind of significant takeovers on this kind of scale, having that as an opt-out for future would be, I mean, it seems that it would be extremely risky, wouldn't it, to be able to demand that you be the first one. Now, just to give you a little bit of context with this, we've got that currently, they're talking about that the possible offer value Pinewood AI entire issued and to be issued share capital of approximately 545 million, as we've said, that it represents a 43% premium to the company's closing share price of $3.14 per share on the 23rd of July. So, the price is also a 53% above Pinewood's 1 month volume weighted average share and 64% above its 3-month average. So I think that gives you a little bit of context of, it is a good value that's on the table for this acquisition of Pinewood AI, but it is this, obviously, this one line of in it that is spooking Harwood's from not accepting it, isn't it?
Yeah, and the Times points out that among those actually backing the deal is Lithia, so America's largest car dealer group that's bought the old Pendragon business back in 2024 for £397 million. And Lithia owns a 32% stake in Pinewood, so obviously a lot greater than the Harwood Capital stake. So as I say, we will be revisiting this fairly soon, I suspect, Phil.
I can imagine that Lithium might be looking at that and thinking a 64% increase on a 32% shareholder might be a nice little win for them to
Exactly.
capitalize on, I would suggest. So heading over to AM Online now, and as Curtis said at the start, that a third of dealers see growing market for 100,000-mile used cars. And this is more than a third of dealers believe that there is a growing market for used cars with over 100,000 miles on the clock. And this is according to new research, and this has come from the Startline used car tracker. As I say there, it found that 35% of dealers surveyed see an expanding market for higher mileage used cars. Now, I suspect this does come with some concerns of obviously some areas of customer expectations and repair costs, etc. Curtis.
Yeah, which, funnily enough, because of the way we've put together this week's show, we'll cover in the next story. But staying with this one, so the research, which the sample was 60 dealers, 300 consumers, found that 4 in 10 dealers said the quality of modern vehicles means they can still have considerable life remaining after passing 100,000 miles. And almost a third described customer purchasing higher mileage vehicles as pragmatic buyers, while 15% said cars with more than 100,000 miles typically sell well. And Paul Burgess, chief exec of Startline Motor Finance, said, what we found is that a significant minority of dealers seem to feel positive about 100,000-mile cars, saying they often carry their wear well, have plenty of life left, and that there is a definite group of pragmatic buyers for these vehicles. So this is all around affordability, isn't it? Because those 100,000-mile cars, they're older cars. They will be cheaper than sort of newer ones, lower mileage ones. So, pragmatic buyers are really looking for this affordability.
It is, I suppose, I suppose today a 100,000-mile vehicle is probably an entirely different vehicle than it used to be a few decades ago in terms of, that quality and everything on it. But again, I mean, they do expand on the results here, saying that despite the growing dealer confidence, there's still 38% said that motorists often regard cars with more than 100,000 miles on of too much of a risk. But they do obviously then go on to say that the research also found that 68% of dealers would be willing to retail cars with more than 100,000 miles on. But beyond that, once it gets above that 130,000, it starts to fall off, saying that 23% for vehicles with more than 150,000 miles on, and just 8% for those with covered 200,000 miles. Which you can really understand that one, can't you? When you start to get up on that kind of percentage.
Yeah, and looking at the next story, because it is very closely linked from Motor Trade News, and the headline there is "Customer Expectations of Used Cars Out of Step with Market," warns Warranty Solutions Group. So this is research that Warranty Solutions Group, WSG, has done, and it found that 85% of dealers surveyed said that buyers increasingly expect the same standard from used cars as new cars. And the research also identified that over half, 55% of dealers, said that customers occasionally or frequently attempt to reject a vehicle after reporting a fault instead of allowing the dealer to diagnose and repair the car. And it goes on to say that of the 100 UK dealers surveyed as part of this research, 90% said that customers do not fully understand their responsibilities regarding wear and tear, a vehicle's age and its mileage. So this is really looking at the impact of the Consumer Rights Act, because it goes on to say that almost three-quarters of dealers said they had experienced between 1 and 5 Consumer Rights Act used car rejections within the past year.
I mean, this is it, isn't it? And within the story, Professor Jim Saker, that many of the listeners will know, who's president of the IMI, the Institute of Motor Industry, said that the Consumer Rights Act was introduced at a time when vehicle technology was very different to what it is today. Modern vehicles are increasingly software driven, highly connected, and significantly more complex to diagnose than their predecessors. That inevitably changes how faults present themselves and how quickly they can be identified and resolved. And saying at the same time, consumers quite rightly expect high standards when purchasing a used vehicle. Saying that the challenge to the industry is ensuring that those expectations are aligned with realities of buying increasingly sophisticated vehicles that also have age, mileage, and normal wear and tear characteristics. So, yeah, very clear there that we're in a changing market, and consumers' expectations and complexity of vehicles is getting tougher at a time where looking at those older vehicles where the customers still want as if it is a brand new car, even though it may be 10 years old with 100,000 miles. You still get that Consumer Rights Act, don't you, that plays into it.
Yeah, definitely. And, while approved used car schemes operated by the franchise dealers and warranties given by or added by independent dealers and car supermarkets will give greater protection to customers, that there is still that sort of uncertainty and also that raised expectation of how these cars will perform and their longevity.
Yeah, so again, we'll see this one develop as we go through this. We've got a couple of quick stories and updates on Big Motoring World before we head to the midway break. And the first one is that in AM Online, that Big Motoring World sales rise 21% as used car records tumble. And that the Big Motoring World has reported a 21% year-on-year increase in used car sales during the first half of 2026. After setting a succession of monthly and quarterly records, saying that the independent car supermarket group said improved pricing, a stock mix more closely aligned with consumer demand, and investment in customer care and after sales has helped drive growth. I mean, this is a great turnaround for Big.
Yeah, definitely. And some of the figures worth looking at. So Big Motoring World sold more than 18,300 used cars during the first 3 months of the year, setting a new quarterly record for the business. It also achieved successive monthly sales records in January, February, March, and April, while two of its dealerships each exceeded 1,000 sales in a single month for the first time. So Big are really, upping their game and certainly selling a lot more vehicles as they expand.
Yeah, as you say there, I mean, they became a RAC approved dealer in May, giving consumers the access to the RAC approved garage and repair network and additional independent reassurance over their vehicle standards. And that's just one of the areas that they look to improve. But there is a bit of a change happening there, because if you head over to Motor Trade News, and this is that Big Motoring World consults on scaling back consumer car buying sourcing division. Now, I know this is something that they went quite heavy in, but there's changes there.
Yeah, it's a very brief story, and it's based on an announcement that was put out by Big, saying that Big Motoring World has started an employee consultation on a scale down of Big Wants Your Car, which was really Big's alternative to We Buy Any Car. And this division sources used cars from consumers. And the scale down would potentially result in redundancies. And this particular report goes on to say that Big said it's working with those potentially impacted to explore all available options and evaluate redeployment where practical. But bit of a surprise, I think, because that seemed like a really good opportunity for Big to go into as a ready source of used vehicles rather than depending on auctions and part exchanges.
Yeah, I mean, obviously not fully clear of what the strategic view is around why they've made this decision. I mean, it's a competitive market, as we well know. It's a changing market because of obviously the volatility of used car values and other things. And maybe it is a case of resource. It's focusing on, what they are specialists at, which is selling used cars. Obviously, a big part of selling is buying, and we shouldn't dismiss that. So yeah, not quite sure what the rationales behind this. But as you say there, the story does indicate that the consultation period began on the 28th of July.
Yeah.
Scale back this division within Big.
Yeah, and it does make it clear that a Big Wants Your Car will remain as a source of stock for the group, although the number of cars sourced through at the channel will be reduced.
But we'll be back after this break with more headlines.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Cazoo.
Well, before we head into the next story, which is that Vertu chief clashes with Labour MP over ZEV Mandate review, we'll play you a public recording that was shared by Perran through his LinkedIn of him sharing his statement to the MPs in the Commons this week.
First, Mr. Speaker, whenever she reviews the ZEV mandate, can the Secretary of State confirm that she will consider the entire EV supply chain, including the billions invested in domestic lithium mining, battery production and charge point operators, and not just the views of ICE-based legacy car manufacturers?
Well, Philip, couldn't help but to pick up on that phrase, ICE-based legacy car manufacturers. I've never heard them called that before.
That was quite clear once at vision of his view to our.
Yeah, definitely. So, yeah, very much a spat here, and just as a bit of background for anyone who doesn't know, Perran, he's the Labour MP for Redruth down in Cornwall, but he was he was in the automotive scene prior to moving into politics. So he was marketing director at Mannheim and B2B marketing director at Auto Trader. So, he does know the industry very well. But what's emerged is that he seems to be taking a different path on the ZEV mandate to a lot of people who are still in the industry, notably Robert Forrester. Now, Robert Forrester, chief exec of Vertu Motors, has made it clear pretty much from the outset his views on the ZEV mandate and the prescriptive nature of the ZEV mandate and the disconnect between the mandate and consumer demand, which is really what he's pulling Perran up on, isn't he?
Yeah, and it's a great story, and it'd be. We should try and catch them both on the podcast together. That'd be for if Robert's listening this morning, then and maybe we can try and set that up. But it does highlight in the story saying that Moon said, right, let's cut the crap about the ZEV mandate review. 180% of vehicles manufactured assembled in the UK are exported and therefore not subject to UK ZEV mandate. 2, it's not the job of the government to underwrite manufacturers' commercial decisions to focus on internal combustion engines rather than EVs. And 3, we are not going to break our manifesto commitment to ban the sale of new petrol and diesel vehicles by 2030. So fairly clear laid out of their stance on this one, Curtis.
Yeah, that was a fairly robust LinkedIn post, and Robert Forrester responded by saying that the mandate was creating an imbalance between EV supply and customer demand, forcing manufacturers to discount cars to stimulate registrations, which Robert's been very consistent on all the way through. And a direct quote from him was, I'm afraid this post, as in Perran's post, misses the point that this state intervention of aggressive targets and threats of fines impacts market balance. The EV targets are higher than the natural demand of consumers and businesses for the product. And he goes on to say, as a result, supply exceeds demand. Prices, therefore, have to be reduced to levels below cost on EVs to stimulate demand. This impacts all OEMs who have all invested in EVs. Profits and returns disappear, as noted by the SMMT, with discounts of £5 billion a year. So a clear counter-argument there.
Yes, for definite. So we will, again, another one that we'll watch play out. But the offer's there, Robert and Perrin. We can have a balanced discussion on the podcast if you so wish. Moving on to the final 2 stories, and this is that on motortrader.com, JCB Group acquires Canterbury VW in Kent. This is a great little group, JCB, and they just continue there in the background, don't they? Operating positive, great business, continue to sort of acquire the odd dealership here, there, and everywhere.
Yeah, so this is JCB Group has acquired the assets of Euro Canterbury Volkswagen's car business, its TPS parts centre, and Canterbury Volkswagen commercial vehicle authorised repairer, as well as a Suzuki after-sales specialist operation. And the car business located in Canterbury will now operate as JCB Volkswagen Canterbury, while the commercial vehicle authorised repairer will be known as JCB Van Centre Canterbury. And it's a good move by JCB. We don't hear a huge amount about JCB, but when we do, it's always a sort of a good strategic move. And within this story, Jonathan Biscoff, owner and MD of JCB, said, "We're delighted to welcome the Canterbury teams into the JCB Group family. This acquisition represents another important step in our long-term vision of providing county-wide representation and outstanding customer service across Kent."
No, it's actually a great little operation. And we're also going to go a little bit more local to me now, and a friend of the podcast, and this was shared on their website, and this is that Luscombe Motors rewards every employee following a record-breaking year as company targets further growth. And I mean, Robin passing over the mantle a little bit to Sam. Robin now the chairman. I mean, this is a fantastic little business, and I mean, these are great guys. I've spent quite a little bit of time with Robin over the years, and with Sam. But this is a great little bonus for the employees, isn't it? This one.
Yeah, this is a great move, and Robin did share this on LinkedIn, and it got a lot of likes. And so what they're doing is Luscombe Motors has very much underlined its commitment to its staff by paying £170,000 in profit share bonuses to its employees following the company's record-breaking financial year ending 31st May 2026. And the piece on the Luscombe website says, in keeping with the company's long-standing belief that every member of staff contributes to its success, the bonus has been shared equally across the workforce, regardless of role or seniority. So that's really the key to this. And this is this is typical of Robin, isn't it? It's, he acknowledges the support that the business gets from each and every member of the team, and is rewarding them equally.
Yeah, I mean, he's as I say, I mean, I've always respected Robin, and now with Sam there as well. I mean, they've got a fantastic little business there, and continue to grow and expand with their brand representation, and more recently with that sort of a Moda and JQ business that they've taken on up there. I mean, it's a fascinating business, and let's say they just continue getting from strength to strength. And Sam was leading that. When they took on MG and really grew that EV within the MG brand, and we caught with Robin and Sam, didn't we, on the podcast a while ago. But yeah, again, great standard of customer, employee care, and Robin over the years has obviously always believed in that, in terms of that employee and high standards that they then give to the customers.
Yeah, I mean, they've always been a business that has punched above its weight, and it's been fascinating to see it grow over the years, because initially it was, or for many years, it was a solus Suzuki business, but as you say, successfully took on MG, and more recently a Moda JQ, and the business has aspirations to grow, and what a solid base on which to grow it with. The staff there now even more fully committed than they were before.
Absolutely. I mean, what a period of 49 years for Robin, from his days as a parts apprentice, for just 49 years ago. But respect there, Robin, if you are listening. But yeah, 49 years ago, coming into the industry as a parts apprentice there, and kind of anybody that's thinking about apprenticeships within the automotive industry and where you operate within the sector today, this demonstrates what you could achieve, and what Robin has done over that period, and is building a legacy for his family as well along the way, and the employees within that organisation. So a big shout out to the Luscombe family and their employees and colleagues over there in Leeds. But that's it for this week. So hopefully we've covered the majority of the big stories. And Curtis said throughout, I'm sure we'll be revisiting some of these stories continuously as things develop. And they say, don't miss the two pre-records that we've had with Rupert Ponting from Brago, and with Steve Young from ICDP and Auto West in London. And as we said right at the offset there, keep an eye out for your podcast feed after the weekend for hopefully a fascinating and eagerly awaited interview with Philippe Munoz, who will share his views on the Chinese and OEM manufacturers.
Maybe even some ICE-based legacy car manufacturers will get. But that is all for now. So many thanks to you for listening to this Motor Trade Radio podcast. Until next time, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Cazoo.